In this video, I am going to be sharing the best ways of using the MACD indicator to make consistent profits. But before we start, be sure to subscribe to our channel as we share new and effective strategies every week to help you become a better trader. With that being said, let's get started. Firstly, let us understand what is the MACD indicator and why should we use it. MACD stands for Moving Average Convergence Divergence. The MACD indicator is a simple trend-following momentum indicator that shows the relationship between two moving averages of the asset. It is calculated by subtracting the 26-period exponential moving average from the 12-period EMA. The result is plotted on the chart with the blue line. This is called the MACD line. The yellow line here is a simple 9-period moving average of the MACD line. It is known as the signal line. The signal line can be used as a trigger to activate buy or sell trades. For example, when the MACD line crosses above the signal line, it indicates a buy signal. Similarly, if the blue line crosses below the signal line, it indicates a sell signal. As I said earlier, the MACD line is calculated by subtracting the 26-period EMA from the 12-period EMA. When the price is in an uptrend, the 12-period EMA will be above the 26-period EMA, therefore, the MACD line will be above zero. On the other hand, in a downtrend, the 12-period EMA will be below the 26-period EMA, and hence, the MACD line will be below the zero line. Now let us bring in the last element of the MACD indicator. That is the MACD histogram. The MACD histogram shows the distance between the MACD and the signal line. If the MACD line is above the signal line, the histogram will show green bars. On the other hand, if the MACD line is below the signal line, the histogram will show red bars. The histogram is an important part of the MACD indicator, but we will not use it in our strategies. An important point here is that we will not use the MACD alone to trade, but we want to use the MACD in conjunction with other concepts to identify trade opportunities. Now that we have covered the basics of the MACD indicator, let's look at the strategies. I am going to share two strategies today. One is a trend-following strategy and the other is a reversal trading strategy. Let us start with the trend-following strategy. The market moves in two phases: the trending phase and the ranging phase. When the market is making higher highs and higher lows, it is in an uptrend. Similarly, when the market is making lower highs and lower lows, it is in a downtrend. Our goal with this strategy is to find high confluence areas and enter the trend on pullbacks. The first step of the strategy is to identify the trend of the market. For that, we will use the 200-period exponential moving average. In an uptrend, the price stays above the moving average, and the moving average is sloped upwards. We can also see that the price finds support at the moving average. On the other hand, in a downtrend, the price stays below the moving average and the EMA is sloped downwards. The moving average also provides resistance in a downtrend. Look at this chart. Here we can see that the price has constantly stayed below the 200-period EMA, and the EMA is also sloped downwards. This means that the price is in a downtrend. Hence, we are only looking for sell opportunities. The second step of the strategy is to identify confluence areas between the EMA and support and resistance lines. We already know that in a downtrend, the EMA provides resistance to the price. Hence, we can say that when the price reaches here, there is a possibility that it may reverse due to the resistance provided by the moving average. If we look closely, this area also coincides with a major level of support and resistance. This level has provided a major support before. It has recently provided resistance as well. This means that it is a strong level, and it can provide resistance when the price reaches here. The moving average and the horizontal level indicate a strong resistance in this area. Hence, there is a high probability that the price could resume the downtrend after hitting this level. But the catch here is that we will not enter the market when the price reaches here. Instead, we will wait for the MACD to confirm our short bias. So the third step is entering the trade after the MACD crossover. To enter the short trade, we want the MACD line to cross below the signal line. We will sell the asset here. We can keep our stop loss above the resistance level here. And we can keep our targets at 2:1 risk to reward ratio. As we can see, the price quickly reversed after our entry, and we made good profits. Let us now look at the buying setup. Here we have the NVIDIA stock on a 30-minute time frame. Here we can see that the price is trading above the 200-period EMA, and the EMA is also sloped upwards. This means that the stock is in an uptrend, and we will only look for buying setups. The price has respected the EMA before. Hence, we can expect the EMA to provide support once again, as the price makes a pullback. This area also coincides with a strong level of support and resistance. This means that there is a high probability that the stock will bounce back and continue its uptrend after this pullback. We are now prepared to buy at this level. But we want to wait for the MACD to confirm our bias. Here is our entry trigger. Here we see that the MACD line crosses above the signal line. This indicates that the pullback is over and the stock is ready to shoot up again. Hence we enter here and keep our stop loss below the support level. We can place our targets at 2:1 risk to reward ratio. We achieved our profits in this instance. Now let us look at the second strategy. This is a reversal strategy. In this strategy we aim to catch trend reversal and capture them early. The first step of the strategy is to find a trend. Look at this chart. Here we see that the price has been making higher highs and higher lows for quite some time now. Hence we can say that the stock is in an uptrend. We now have to wait for the trend to reverse. The second step is to plot trend lines on the chart as well as the MACD. In an uptrend, a trend line is created by connecting the lows of the trend. This is how the trend line looks for this trend. We will also create a trend line on the MACD indicator to replicate the trend. The third step here is to wait for the breakout of the trend line. As I said earlier, the MACD indicator is a momentum indicator. For a successful reversal to occur, first there needs to be a change in momentum, followed by the price action. This is where the MACD comes into the picture. When the MACD line breaks down from the trend line, this indicates that the momentum of the stock has changed and a downtrend might occur shortly. But the important point here is that the price has not broken the trend line yet. Only the MACD has broken the trend line. Hence, we will wait for the price to break below the trend line to initiate the trade. Here is the breakout. We sell the stock here and keep our stop loss above the trend line. We can keep out targets at 2:1 risk-reward ratio. The reversal was successful in this instance, and hence we made profits. The key here is that we want to see the MACD line break below its trend line before the price breaks its trend line. We need to understand the chronology of events. First, the MACD breaks below the trend line, then, the price breaks the trend line. This shows us that there is a shift in momentum that leads to a shift in the trend of the stock. Let us look at one last trade to make sure we understand this strategy. We see an established downtrend here as the price is continuously making lower highs and lower lows. We now plot a trend line by connecting the lower highs. Similarly, we plot a trend line on the MACD to replicate the trend in the price. Look at this point. Here we see that the MACD has successfully broke above its trend line. But the price has not broken its trend line. This shows us that there has been a rise in the upside momentum, but the price is yet to make the upside move. Hence, we wait for the price to break its trend line. Here the price breaks above its trend line. We place a buy order here. We will keep our stop loss below the trend line and place our targets at 2:1 risk-reward ratio. And as you can see, the price gave a healthy up move. This brings us to the end of this video. Here, I have revealed 2 amazing strategies that you can implement right now to earn good profits. Be sure to subscribe to our channel so that you don't miss on any of our upcoming videos. See you in the next video.